James Rickards, Currency Wars, The Making of the Next Global Crisis. Delve into the world of economic battles and the complex relationship between currency and national security with James Rickards' Currency Wars, The Making of the Next Global Crisis. The book provides a comprehensive look at the history of financial conflicts, the impact of currency manipulation, and the increasing threats to the global economy, including the destabilization of the US dollar. Explore how the intertwining of national wealth and national security has led to unique scenarios and strategic decisions within the world economy. The book provides valuable insights into the increasingly interconnected global economy and the rising risk of financial attacks.
The new threat to America's wealth. The U.S. military power's foundation lies on sophisticated technology, elusive espionage, and complex war systems. However, the U.S. now faces new and peculiar dangers from transnational actors and rival nations, such as jihadist groups. These threats include chemical, biological, and internet-based attack systems. Moreover, the unexpected twist is the threat of financial weapons that can lead to fiscal aggression or computer manipulation or international economic foundation collapse. In reaction to possible financial attacks, the Pentagon developed a global financial war game to identify and assess the extent of the threat. The players consisted of international policy experts, Wall Street professionals, military brass, and Department of Defense staff. During the exercise, the players divided into competing teams with region-specific objectives and scripted political moves. Russia, one of the opponents, demanded payment for energy exports in a new gold-backed currency, supported by other countries such as Japan and China. The players acted buying gold and dumping the US dollar on the international market, whereas North Korea flooded the global market with counterfeit dollars. The exercise revealed that despite any successful attack on the dollar, the U.S. held enough gold reserves in military facilities to survive a fiscal war. The ugly truth about currency wars. Competing currency devaluations can lead to global fiscal meltdowns and military strikes. This book highlights the negative impact of devaluing currencies, from sparking trade wars to causing the Great Depression of the 1930s. But such conflicts still persist, with the US, Mexico, Russia, UK, and more recently, China, accused of currency manipulation. The consequences of currency wars can be catastrophic, leading to inflated oil prices, high inflation rates, and a collapse in dollar-denominated markets. The book cautions against the dangers of currency battles and emphasizes the need for international cooperation. The rise and fall of gold standard. In the era from 1870 to 1914, countries used gold as the basis for international trading, leading to zero inflation and improved standards of living in what historians call the classical gold standard. Nations obeyed the guidelines of an unwritten gold club and adhered to free market principles to stabilize international prices and adjust trade deficits. The U.S. joined this club in 1900 and was followed by Japan, Germany, Russia, Argentina, and India, among others. However, World War I marked the start of the end of the gold standard era, leading to the first of three global currency wars that played out over the 20th century and beyond. Overall, the gold standard provided a system that strengthened communication, technology, banking, finance, and trade, and improved mobility and productivity. The evolution of currency wars. After World War I, Germany used hyperinflation and devaluation to reignite its economy, causing a cycle of currency devaluations amongst nations. The result was financial disarray and global depression, culminating in the U.S. stock market crash of 1929. The Tripartite Agreement of 1936 and the Bretton Woods Pact of 1944 restored economic stability by tying the U.S. dollar to the price of gold. However, the use of currency wars as a tool for boosting economic growth has been a problematic recurring theme in history. At best, these wars offer the sorry spectacle of countries stealing growth from their trading partners, and at worst, they degenerate into bouts of inflation, recession, retaliation, and violence. The evolution of currency wars highlights the interconnectedness of today's global economy and shows the potential risks of monetary policy decisions. The Battle Over Currency, a Historical Account. The book recounts the second global battle over currency that began in 1967 due to the U.S. federal budget faltering under the weight of the Vietnam War and the Great Society Anti-Poverty Program. Inflation soared, and the value of the dollar slid relative to gold. Simultaneously, Britain was grappling with inflation and international commerce deficits. The pound sterling was still a pivotal currency in global trade. The pound's devaluation in 1967 was the first significant crack in the Bretton Woods facade. Several countries, including France, publicly rebuked the U.S. and objected to the dollar's top position in the world fiscal structure. France exchanged $150 million of reserves for gold, whereby Spain also reduced its stash of U.S. dollar reserves for gold. Germany guaranteed not to convert dollars into gold. As the gold pool continued to drain, the $35 per ounce price of gold set and locked in at Bretton Woods was artificially low. Keeping gold at that unnaturally low price led to rising inflation in several leading economies, including the UK and the US. In 1971, President Richard Nixon abolished other countries' central banks from using their US dollar reserves to convert into gold, thus detaching the value of the US dollar from that of gold. The Nixon plan precluded the U.S. trading partners from importing goods, wherein the IMF and G10 worked on a compromise that eased the U.S. trade deficit without creating an oversized financial burden for other countries. By 1973, the U.S. had slid into a deep recession with high unemployment, collapsing stock prices, and out-of-control inflation. Currency devaluations re-emerged in Europe. Paul Volcker, chairman of the Federal Reserve Board, hiked interest rates to break the inflation spiral. Economic stability returned during the 1980s, and the Second Currency War came to a close. Currency War 3. The book covers how the 2007 global financial crisis sparked the modern era's third currency clash in 2010, with China, the US, and the EU being the main combatants through their respective currencies. Investment bankers, hedge fund operators, and traders are new soldiers in this currency war, which involves global institutions such as the World Bank, United Nations, and IMF. The book focuses on the face-off between the Chinese yuan and the US dollar, highlighting China's need for jobs for its massive population, which it fueled through export industries by keeping its currency undervalued relative to the dollar. The trade shortfall between the US and China only got bigger, with China using its export dollars to buy U.S. Treasury bonds, putting the U.S. deeper into its debt. The book argues that this currency war is high stakes and goes beyond bilateral trade issues to the heart of the international monetary system, with its geographic consequences going beyond economic concerns to national security issues. The decline of the dollar. The global shift away from the U.S. dollar as the world's reserve currency is becoming more evident, with significant actions taken by powerful nations such as Russia, China, Brazil, and Iran. The increased use of gold, the adoption of new reserve currencies, and the search for alternative trade settlement mechanisms are all signs that could lead to the dethronement of the almighty dollar. The World Bank's push for gold to play a greater role in the global economy, coupled with the yuan-ruble currency settlement mechanism initiated by Russia and China, all suggest a shift away from the dollar-dominated system.
In conclusion, currency wars. The making of the next global crisis sheds light on how currency manipulation has escalated global tensions and economic crises. The author emphasizes that despite previous crises and challenges with currencies, such as the US dollar, countries have managed to survive by using valuable resources like gold reserves. Rickards warns about the possible collapse of the dollar and its consequences on national security, stressing the importance of understanding and managing currency wars in today's interconnected global economy. As nations continue to battle for economic dominance, this book highlights the complexities and perils of financial warfare, as well as the mounting threats that have ramifications far beyond bilateral trade.